Hello traders, it's Samurai Trader here. Welcome to this training session. Today we're going to be covering a lot of information, and if you don't already have so, please grab your notepad, your trading journal, and be ready to take some notes. So in this particular session today, we're going to be talking about day trading the futures and Forex markets, looking at some different charts. But probably one of the most discussed topics in the trading world is, do you really need indicators? And of course, around the world we have thousands of educators that are selling their U-Butte indicator quite often for thousands of dollars. All respect to them, by the way, because I use indicators, but I'm going to also show you how to trade without indicators. And for newer traders, this actually may help you a great deal, because let's remember that when it comes to trading, the more that we have on the screen, the more confusing it can become. So before we get underway, if you haven't seen one of my videos before, please read the risk disclaimer. Very important that you understand that you never trade with the rent money. If you haven't already done so, if you go to full screen, down in the bottom right hand corner you can click on the box and it will go to full screen for you. And of course, all of this and a whole lot more I cover comprehensively in the Day Traders Fast Track program. Now there's now over 20 hours of recording. There's cheat sheets on the different setups that I have, but for $197 you get the world's best day trading and swing trading strategies. Traders, don't spend thousands of dollars. Maybe you already have and you need to turn your trading around. I'm a day trader. I trade every day. I do this. I educate traders because I'm passionate. I love trading and I get a buzz out of it. That's why I teach. So it's my passion. So keep your dollars in your trading account. I prefer you do that. It's a tiny investment and it will turn your trading around. So let's get back to the topic I want to talk about, is that indicators. Now most traders, particularly newer traders, suffer from what we call information overload. It's a little bit like learning how to drive a car, I suppose, learning how to trade for the first time. If you go back all those years ago, for me, is that when I first got in, I learned to drive in a stick shift in a manual. You know, you've got to use the brake, the accelerator, the clutch. You've got to change the gears. You've got to look at the road, use your indicators. I mean, it really is quite daunting. Yet after 30 or 40 days it becomes quite natural. However, for traders, particularly because most traders don't have an instructor or they don't have a coach, it can be confusing for a long time because they've got to try to learn all of this themselves. Now if we consider Einstein, I love this statement here: small is the number of people who see with their eyes and think with their minds. Trading, of course, is a game of probabilities, stacking the odds in our favor. And what stacks the odds in our favor are patterns that appear in the markets every single day. Now the indicators at times can confuse these patterns, particularly if we consider trading divergence, because you can quite often have divergence on price and on your indicators, but yet the market kicks up and keeps with the trend. So we're going to be looking at that and discussing a few things here. Now a very important thing which you'll hear me talk about in virtually every video is this, is that master one setup before you move on to another. And as you're aware, over 70% of my traders or students that I have are experienced traders, and the professional traders I work with, if we have to retrain you, or perhaps if trading hasn't been kind to you up till now, you really need to go back to the drawing board, start with one setup, master that setup. And I love what Nido Cobain says here: nothing can add, let me start that again, sorry, nothing can add more power to your life than concentrating all your efforts on a limited set of targets. How that relates back to trading: focus on one or two setups and you'll master the art of day trading, I promise you. But what you've got to do is practice discipline. So let's go and have a look at some charts, and I want to show you a few things and explain a few things. So the topic today is, do you really need indicators? Well, down the bottom here, what I've got here is a MACD. Now MACDs traditionally are used in two main ways: is for trend, to discover which way is the market trending, and for divergence, etc. So we can see here that we've almost got a double triple top across here, and my platinum, what I call a platinum, is falling away. So we've got divergence. However, is it always right? Absolutely not. And for new traders it can become confusing. So you don't, as we're going to be really covering this and looking at some indicators that in many ways are not indicators. If we look at, what are my four lines here? My four lines here are moving averages. Now I use moving averages for trend direction. They're easy to see, they don't take a lot of thinking when we look at them, compared to down the bottom here I've got my stochastics and my MACD. So if we're trying to read these and read price action, for a newer trader particularly, you can become overwhelmed. By the way, what we're looking at here is the Euro USD 5 range chart. So the biggest thing when it comes to trading is pattern recognition. Now what I'm looking for here, and really looking at what the floor traders, and actually let me go back one step. Let's talk about floor traders. Floor traders in the exchanges are virtually extinct now. Most of the open cry pits of course are gone and it's all computerized, but when it comes to the floor trader methods, they didn't have indicators. And if we look at some of the professional institutional traders now, they will simply trade with the trend, they'll look at volume, but they don't have indicators per se. They don't have the things that we see being sold for $5,000 and $10,000. They're not usually using the stochastics or the MACDs. They may use the moving averages, but they're waiting for pullbacks. And so if we look at the chart that we've got here, look at this, you can see here the cyan line, that's an 89 EMA. You can see price comes down, tests it, and what is that? That's support. So we can see here that the 89 is acting as support. And so one of the things we may do here is this, and this is a floor trader method. We can see here we've had a pullback to support. We're going to wait for a breakout up here, tick high, which is what it does, and away it goes. Let's do another one, and we can see here we've had a pullback. We've pulled back to the 34, we've broken above it, and we enter the trade on either a tick above this high of this candle here or on the close of this one, and away it goes. In fast moving markets, where normally I'm looking for a 2 to 5 candle pullback, you may only wait, you may be willing to go with simply a 1 candle pullback is what we've had here, and wait for the high to be taken out. And let's do it again, wait for the high to be taken out. Now traders, I'm not even referring to my indicators down the bottom here. All I'm looking at is what is my 8 EMA telling me, along with my longer term indicators. Now the further you move away from these indicators, the moving averages, the more likely you are to have what we call a snapback, a pullback to price. And the yellow is the golden number, the 34 EMA. You can see we've gone up. We've had for my students, I know this is a T89. It's pulled back nicely. There's some nice profit in that one, but then we had a breakout, but then it fell right back here till we bounced off the 34, and that was profitable. Once again, we're not looking at the indicators down below. So getting back to the original question, is it possible to day trade successfully without indicators? Absolutely. With the exception, the indicators I would use are my moving averages for trend direction, and also to keep me in the right side of a trade. Now what do I mean by that? One of the rules that I have, and it's a really simple rule, the blue line you can see here is my 8 EMA, is that for a short trade I have to close under, on or under the 8 EMA. And look at that there, we go all the way down here and we close above. There's really 2 or 3 days profit if you had waited for a close above. But putting that aside, we can see here we've come down and we now bounce off the 200 EMA. Where I can look for long trades is as long as I close above the 8 EMA. So you can see here I've had a pullback. Where can I re-enter? Well, for my traders, my experienced traders know this is a classic 34 bounce. When we close above, away we go. So here, close under, close above, close above, close under. Now I'm just making it simple, traders, because I don't want to get too bogged down here with this today. But we can see here we close under, away we go, and this, as we know, is a classic T20. We had a classic T20. When you're under the 8 EMA, you're short. When you're above the 8 EMA, longs only. This simple rule of trading either above or below the 8 EMA is probably 70% of your trading success if you follow the rules. So traders, do you need the indicators? No, you don't. But where are we, or where do we use them? Well, indicators are tools. Where I will still use these sort of indicators is for divergence trades. Now, a divergence trade is where I have a classic divergence, is a higher high in price. We've gone up, pulled back. So what have we got there? We've got a T25, traders, nice winner. Goes up, I've got a higher high on price and a lower high on my MACD, and then of course that is a classic divergence trade. However, they still fail a lot, and it's an extra indicator for a newer trader to learn. Down here we've I wouldn't be using the platinum in this particular case. We've had a great pull away. This is actually what we call a T89 setup, just here. To be safe, wait for a close above the 8 and away we go. Not even using the platinum. Here, this is a classic slingshot, a T2 as we know it, traders. So we can look down here. For newer traders, we can see here it's also a 34 bounce, but just using the 8 and a close over the 8 EMA, we don't even really need to refer to this if you want to be really simplistic. So a lot of traders like to use indicators as, if you like, their baby blanket, a little bit of comfort. But your original floor traders might have used the 8 EMA or the 34 for trend direction only. They're going to buy the pullbacks. Okay, so we pull back and they'll buy. That's how they traded. So traders, I cover this and a whole lot more in the Day Traders Fast Track program. If you haven't already subscribed to my channel, please do. Make an investment in your future. Purchase the Day Traders program. I cover this and a whole lot more. I'm dedicated to your success as a day trader. You can do this with the right education and no BS. You can do this. Thank you, traders.